or get more education about what's it called? Get more education about financial freedom, right? So it's to educate more people on financial freedom. And one of the things that we do every month is to bring topics, is to bring resources, is to bring information and opportunity for people to be able to get that education, right? So as we also go forward in this particular webinar, you would also be getting access to resources, information, right, opportunities, and you will also get the what's it called? The free gift of joining our wealth community, right? So you would have that access to join our wealth community. And I want to implore you that while the meeting is going on, immediately the link is being sent, please join, right? And also register on our platform, because I promise that big things are going to be coming out of this particular webinar. So today we are, this particular webinar is more of how to access mortgage in Nigeria, access mortgage finances in Nigeria. Many Nigerians do not know that they have access to this particular finances, right? A lot of people don't even know so much about mortgage. They think it's just about you going to go and, buy the land and say, okay, I want to go and build. But then there is particular, way that you can actually get funding for your mortgage. But as much as information is powerful, not so many people know it. And that is why this particular webinar is up today, for you and I to learn more about how to access finances in Nigeria, especially regarding mortgage. So please, I would, at this junction, I'm going to be resting my case and say you should, relax and enjoy your ride, right, on this particular webinar. So thank you so much. And I'm going to be welcoming Mr. Damilare Oshokoya to come into this particular meeting with us. Thank you.
Thank you, Olamide. Good morning, everyone. And how are we all doing today? Good evening. Good morning, sorry. Like you said, it's a raining day here from Lagos. I'd like to say a very big thank you to everyone, members of the community, invited guests who are experiencing this for the very first time. My name is Damilare Oshokoya, and I'm co-founder at Abode. And the Financial Intelligence webinar is part of the program of the Abode Wealth Community. And the Abode Wealth Community is an initiative of Abode, my Abode.app, that allows us to give back to the community by promoting financial information that is needed for individuals to take opportunities. So we're creating a social community where we share opportunities around asset acquisition, growing your finances, and being the best as you work towards achieving your financial goals. The Abode Wealth Community, has been running since last year, and the Financial Intelligence webinar started earlier in the year. Apologies if, you can't seem to, hear me a lot. I'm just not really at the best today, but I have to be able to be here to honor all those who have invited, and also our special guests from Abbey Mortgage Bank that are here already with us today. So my usual self would have been much louder, would have been much more energetic, but even my outfit has given it away that I'm feeling kind of pregnant today. So please do bear with me. But just for clarity, I'm assuming that everyone can hear me, at least bare minimum, I'm audible enough before I go on. Can I have that green light that we can hear me? Oh, God bless you, woman. God bless you, man, for that. So, okay, so the Abode Wealth Community is a vast community of people. We have, different people from different walks of life, from manufacturing to doctors to Nigerians in diaspora, different forms. We even have, youth corps members, students. It's a very vast community because when it comes to this journey, we feel like information is very powerful. One of the quotes that I got from one of my senior friends a couple of years ago is that opportunities are embedded in people as information. Opportunities are everywhere, but people are custodian of it. You just need to, open your ears down, being in the right environment. And for us, In January, we had a session. We even developed an infrastructure, a tool, that now allow people to do management of their what's it called, of their finances. That tool has gone to get many downloads, even from people outside of the country, as a result of feedbacks that we have in this community. So it's very important that every month like this we gather, we look for important topics around finance, wealth generation and the rest, and we'll bring them to our community. This topic has been long overdue. A lot of people have been asking for this particular topic in our community. Some persons have acquired landed property for years. Some have even started working on their housing project, but they couldn't get to finish it. Some have finished it, they want to expand on new projects. And, they're looking for alternative source of capital and financing to endure on. Some of us are here, we're consultants, real estate consultants. We consult for investors everywhere. This knowledge will be integral in reshaping our game when we talk to people. I'll tell you it's wise. And we're privileged to be able to get, Abbey Mortgage Bank. They've been here for 30 years plus. And that is what they have been doing, providing financing, mortgage financing for corporations, institutions, and individuals when it comes to mortgage. And when somebody is 30 years, you need to covet such grace. It means that they have been doing something well and consistent. And that's why we've brought them, to be able to highlight everything for us today. So today they'll be talking extensively around how you can access, the Federal Mortgage Bank, how you can also access from them, opportunities that they've put together within the mortgage financing structure. Some of us might not be even we will just start our journey to that financing today. But in about a year, 2 years from now, you will have met the requirement. And then they will provide hands-on information, practical, of 30 years on how exactly to go about this. So I'm excited. I'm also a pupil here to learn. Joyfully, we just have, before it was 15 million, I think, 15 to 25 million that you can access. But now, we have it up to 50 million. All the age restrictions, age criteria, even for Nigerians in diaspora, their requirements are a little bit different. How you can also access yours will be discussed about extensively. So I really want us to, this is what we're excited about doing, bringing information to people. We do this every month, like Olamide have said. We've done this in January, in February, and we've, brought in industry leaders in those spaces to help to, bring that. And, we're always excited to do this. It's part of our brand give back to the community. And we really want to grow. Why are we doing this? It's because the overall ideology that supports what we're doing. Our Bodasek is a fractional co-ownership community, and we're just a little bit above 1 year. And what we're trying to do is to build like minds, a group of people who are conscious about their financial journey, their financial goals and financial aspiration, where a whole of us is much more important than an individual. Abroad provides opportunities for us. We leverage it with our little finances. We come together, acquire huge assets that has potential for capital appreciation and rental income. And we have testimonies on this, over the last 1 year that we've started. But we know that education is an important part of what we want to do. And creating a social community, a family-like kind of system, will enable us to do this even much more faster. So we can enable trust. So we can do this all together. My partner, Wale, who is not here into this meeting, Mr. Jeffrey Tepu, at the time is going to come that the members of our community will be doing massive projects, like a shopping mall, a 500-stall shopping mall project. And an individual in this community with as low as $5, with as low as 5,000 naira, or 5 Ghana cedis, or 10 pounds, or shillings will contribute and say, I'm also a part owner of this project. That's the kind of future that we envision. And we're very strategic on that journey, and we're going on it face to face. But don't let me bore you on that yet. I know we're very excited. We've been getting a lot of remarks from people, about this program. I can see some few people here who have used emails to bombard us with emails all through this week. They just wanted to be sure on the timing. So I'm not the speaker for today. I just wanted to bring this introduction to us so that we can all get the best of it. You can put your questions down. Let me see if our friends are in the house already so that we can get on with it. Guys, do you have a green light for me if people from Abbey is here? So that we can get on it already with people. Thank you. Just a minute. Okay, do you have representatives of Abbey Mortgage Bank in the meeting already? Okay, yeah. Yeah, I think I can see Madam Blessing already in the meeting. I think she's here. Okay, great. So without much further ado, I have to. Thanks, guys, for that update. So they are here already, and thanks for keeping to time. So please let me welcome the representative of Abbey Mortgage Bank, Madam Blessing Oromini. I hope I pronounced that right. You're welcome to our Good World Community and June Financial Intelligence webinar. Thank you, ma'am. You can unmute yourself now.
Good morning. Can you hear me, please?
Yes, we can.
Okay, thank you for the invite. I'm honored to be here. My name is Blessing Oronimigo. I'm a business development manager with Abbey Mortgage Bank. Thank you for the invite. So I'm here to talk about mortgage, as you've said, how people can access mortgage. Okay, let me turn on my video so I can see. Okay. Please, can you see me?
Yes, we can.
Okay. So good morning. As I said, I'm honored to be here. Thank you for the invite. Mr. Damlari, thank you for having us. So I have, as I said, my name is Blessing Oronimigu. I'm a business development manager for Abbey Mortgage Bank. As you said, Abbey has been existing for 31 years now and will continue to exist for as long as God will have us. Thank you again for the invite. So I have here with me my other colleagues. I have Mr. Felix Omodayo Owotuga, our group head of retail and e-business. I have our head of risks, credit risks and enterprise risk management. You don't guess it, Abia. And I have my branch manager, Mrs. Obi Ezianochikwa, and Jude Okoye from Credits. So we came with the full team to answer all your questions that you may have. So thank you again for the invite. Mr. Damlari, can I carry on?
Yes, you can, but you might want to bring your slide up. Can you do that from your hand so I can grant you access?
Yes, yes. Okay, it's disabled. Can you help me with that?
Send a request to me. Okay, try it again now.
Okay.
Are you having any difficulties?
Yes, I am.
What's the error message?
Okay, it's not allowing me share.
Because I've granted you access here.
Okay. 1 minute, please.
Okay, try now again. Try now again. It should work now.
Okay. Not yet. Can you help me to do that from your? I shared my slides. Can you help me with that from your end?
That will take a while, but I've granted you access already from here, and I can say.
Okay, can you see my screen now?
Okay, it's coming on. Yeah, it's here now. Yep.
You can see it.
Yes, we can.
Okay. All right. So today's topic is assessing mortgage finance in Nigeria for myself. Okay, so as a representative of Abbey Mortgage Bank, I'm going to start with our vision, which is to be the leading mortgage bank out of Africa. Our mission is to create opportunities for to become the first choice for mortgages, housing, finance, and investment. And our core values as Abbey is to be supportive, to be professional, innovative, customer focused, and excellent. You can see my slides moving, right? Just to confirm, okay. Can you hear me, please?
Yes, we can.
Hello?
Yes, we can. We
Oh,
can. Yeah.
all right, thank you.
Yeah.
All right, so to the topic of Abbey Mortgage Bank is a financial service provider with a focus on mortgage and retail banking. As I said, we've been existing for 31 years. We have 8 business locations and we have over 134 employees nationwide. So we have awards for the Mortgage Bank of the Year, the Best Mortgage Bank, and the Most Innovative. So that's a brief. These are executive management, our MD, Mr. Mobolaji Adewumi, our ED, Dipo Adeoye, our group head of IT, and our company secretary. So understanding the concept mortgage. So a mortgage is a loan which you use a property or real estate as the collateral. So it is more like an agreement between the lender, usually a bank, and a borrower receive cash upfront, and you make payment over time. So let me just explain it easily. So a mortgage is basically taking money from a bank to buy a property. Normally, you can take a loan for any other reason. You can take a loan from the bank to do business, for personal engagements, but when it's called a mortgage, it's for the sole purpose of property purchase. No other transaction involved, no other use for the money. It is just for the sole purpose of purchasing a property. That is what a mortgage is about. So when you get a mortgage, the lender gives you money to just buy a house. You agree to pay back the loan with interest over a period of years. When you get a mortgage, hello, can you hear me, please? Let me show the camera.
Yes, we can hear you. But now we can't.
So apologies for the break in transmission. So when you get a mortgage, a lender gives you money to buy a house. You pay back over a certain period of time. Everybody wants to be a house owner, but most times the limitation is when you don't have the complete money to buy the house of your choice. So you need some form of assistance, which usually comes in form of mortgage. So you have to approach a bank and say, oh, I want to buy a house. I've seen a house of my choice. Can you help me pay up? So what the bank does is that I've seen a property of my choice as a buyer. I approach the bank and I say, oh, can you help me pay off the money, pay off the land, or pay off for the property, and I'll pay you back in installments. That is what a mortgage is about. So we as the bank, let's say Abbey Mortgage Bank, if I approach us and say, oh, I want to buy a property, the bank does its due diligence, pays off for the property for you, then you start paying the bank back in installments. So that is the installmental payment is an agreement between you and the bank on how you are going to make back the payment, how much you'll be paying, how long will it take you to pay back the money. So individuals desire to have a place they can call home. In the process of trying to seek the ideal home that is affordable, the concept of mortgage creep swap, where they can pay in installments. So mortgages are given by banks in Nigeria. So the next is features of mortgage. So I just spoke about how you approach a bank to get mortgage, to get money to buy a property. So a mortgage generally has its features. If there's no collateral, the first one is collateral, which is the property that you want to purchase. The collateral is held by the lender until the full payment of the loan is done. So you approach the bank and say, oh, I want to buy a property. Can you please pay off for me? So the bank says, okay, fine, we've done it. The property, the collateral looks good. The property of choice looks good, and it has the right title. Okay, we're going to pay off for you, but we are going to be the owner of the property while you are paying back. So, you know, everybody knows what a collateral is, or let me just explain again. So a collateral is what you hold to give someone money. If somebody approach you as an individual and say, oh, I need money from you for whatever reason, and you say, okay, I need something to hold on to, because we know that giving out money, the process of giving out money is not the same of recovering the money, because sometimes you give people money and they don't want to pay back. But there are laws to lending, and one of the laws that you must have a collateral for the money you want to access. So for the case of mortgage, what you need to provide as a collateral is a property. The example I was giving before was, if you approach an individual, the individual say, oh, give me your phone as a collateral for this money you're taking, or give me your laptop. But in this case of mortgage, it has to be it has to be a property. Sometimes some people can use the property they want to purchase as the collateral. So I want to purchase this property. Okay, the property will be in the bank's name until they finish paying back. Then the bank can give them the property. But others might say, oh, I have another property, which is worth more than this property I want to purchase. Or maybe they don't have maybe at that particular point, the property in question doesn't have the right title, because a bank will not accept a collateral without the right title. That's the first discussion. When you approach a bank and say, oh, I have a property I want to purchase, the first thing the bank asks you is, does the property have a registered title? Because a lot of properties are sold and they don't have the right title, and that brings up issues on the long run. So to avoid that, the first question the bank asks you is, does your property have the right title? If it does, then we can use it as collateral. If it does not, you have to provide another collateral for that property, and that collateral still has to be a property. So for whatever means, if you're using the collateral, the property you want to purchase as collateral, or you're using another property as collateral, the collateral must be involved. So that's the first feature of a mortgage, the collateral, which is the property you want to purchase. The tenor is the period for which the loan is to be taken for and fully paid back. So most different banks or different mortgage options have different loan tenors. So if we as Abbey Mortgage Bank, we do 10 years, or if a customer approaches us and say, oh, I have money, I want to pay back in 2 years, that's fine, we'll do that. 2 years. So 2 years is your loan tenor, peculiar to that particular loan transaction. So the tenor is the period the borrower wants to take the loan for and fully pay back. The principal is the amount of money borrowed for the purchase of the property. So I have a property that has been valued at 100 million, but I have 40 million, for example. I don't need the 100 million from the bank. So I approach the bank and I say, I have 40 million naira. Would you finance the remaining 60 million for the property purchase? So, and they agree, say, oh, we're going to finance it. So that 60 million is your principal. So the loan amount is the principal you have taken from the bank, not the property amount. So the principal is the amount the bank has given you that is taken as a loan, not the property amount. The interest rate is the percentage that is agreed that they will give you the loan for. In this case, different banks or different mortgage options have different interest rates. If you're getting from the government, because the government is cheaper, if you're getting from a mortgage bank, the rates are differ according to the risk appetite or the how much the bank gets their money for. So they always determine, the interest rate is usually determined by the lender based on market conditions. Once the rate of getting money increases, the bank has to increase the interest rates. So the current market rates and the level of risk that the lender is willing to take determines the interest rate they will give to you. Then the loan conditions are the other terms, and more like terms and conditions that guide the loan that you're taking, the mortgage you want. So we say, oh, this we normally do 10 years, but you said you want to do 2 years. Okay, how long and how do you pay back? Do you want to pay back weekly? Do you want to pay back monthly? Do you it states what exactly the contracts the bank is going to with you. So those are the terms and conditions. So for example, when you're taking a mortgage, you have to also insure the property you want to purchase. So those are conditions that you have to fulfill. So different mortgage options, as I said, have different conditions. The conditions the NHF will give you, which is the government's mortgage, be different from the conditions of a private lender. So every loan is peculiar to its own loan conditions. So for all in all, to assess mortgage or a loan from any financial institution, you have to fulfill these. These are the features. These are what is required before the loan can be moved on to the next level. So those are the features of mortgage. Okay, so I would just like to be sure you can still hear me, please.
Yes, we can. You can write on.
Okay.
Thank you.
Yeah, so the importance or significance of mortgage. So mortgage gives you control and privacy. So the sole purpose of getting a mortgage is to own a property of your choice. And everybody wants to be mostly everybody wants to own a property. You want that privacy of owning your own home, not having to live in a rented space or apartment. It gives you exclusivity, which is what everybody will want, but based on pockets, we have to do what we want, do with what we have. So it gives you control and privacy. So you are your own landlord, you have your own space and everything. Also, mortgage gives you the opportunity to own a home early home ownership. So normally, as it is, different based on location in Nigeria, that's how houses cost. The houses in Lagos price is different from the cost of housing in Abuja, different from the cost of price in Ogun State. So people have personal choices as to where they want to own their homes. So I can afford a home in Ogun State, for example, but I cannot afford one in Lagos. And to get one in Lagos, I would need support. So I have that dream of owning that home. The mortgage allows you to be able to fulfill that dream on time, early enough. You don't have to wait and save over the years, because by the time you buy the property using a mortgage option, the bank is you don't get the actual title, but you can move into the house as far as you can pay back that loan. So once you're able to access the mortgage, you can move into the property and it is your own till you are done paying. So that way it saves you already the rent money you are paying, even if it's going to be slightly higher. It saves you paying rent, or you already own your home at that time. So it is early home ownership, which you pay back for the future in the future. So mortgage gives you leverage. So most times people assume that taking mortgage or taking a loan is a bad thing, but we as bankers know that it is very, very useful. It's a good thing because it helps your business, it helps you to achieve a home on time, as I said. But if you have a mortgage and you are paying back on time, and we can see, because there's a credit bureau which shows every lender is registered on that portal. So if you take a mortgage, if you take a loan, you are recorded as your loan is recorded in credit bureau. So if somebody else wants to give you a loan, they'll go to that portal and check and see how your loan is performing. So if you're a good you're a good borrower and you're paying back on time, and it is checked when you want to access money from somebody else, it is checked and they see that you pay your money on time, it gives you leverage. To us as bankers, we believe that somebody with a good credit rating, that's what we call credit rating, meaning your loan is performing or your mortgage is performing. So with a good credit rating, with a good performing loan, is actually a less risky person to borrow than somebody who hasn't borrowed at all. So somebody who has borrowed before, we believe there's less risk because we can see that he has character. He has borrowed before and is paying back. So if you want to give you, somebody else wants to give you another loan for another purpose or same another purpose, they will be willing, they consider you less exposed or a less risk than somebody who hasn't actually taken. So it actually gives you leverage in case of future need for money. So mortgage gives you financial room to make other investments. So if, as I said, by income, to be able to create room, to be able to do other things financially, instead of paying upfront, using the money you have to pay for the property at once, it will be beneficial to pay in installments so that you can have money to do other things. So it gives you financial room to make other investments. The other investments, which will also bring back returns, which you can also use to pay back for your mortgage. So as I said, a mortgage improves your credit rating. So once you have a good mortgage and your rating is good, you are paying back. We see it, and it gives you a rating whereby we know that it gives you a good credit rating. Thereby, a lender can easily lend to you in future without thinking twice, because from your record, from your rating, it is seen that you are a good borrower. So those are some of the importance or significance of mortgage. It saves you money, gives you early home ownership, gives you room for other financial decisions. So how do you access a mortgage? Mortgage accessibility. So generally, there are different options of accessing mortgage. As I said, you can access from the government or private institution. So but to access from either the government or private institution, you have to have these features. That is what is considered before any of them will give you. The first is character. So your character as a borrower is determined by your reputation or track record for repaying debts. That brings me back to the credit rating I talked about. So they check your character. They can, first of all, your statement of accounts gives a lot of information about you, how your money comes in, how you spend. It is assessed, it is looked into to know the character of the individual. But one thing that really speaks to it is your credit rating. So if you have a good credit rating, whoever wants to give you the mortgage will be at peace, knowing that this person has a good character of repayment. The history here shows, if I check credit bureau, history here shows he has always been paying and he pays on time. He's not owing. Everything is recorded there. So if you have money with any bank, definitely your information is on the credit bureau. It's displayed so that every lender that wants to give you money is to protect the lender. So everybody that wants to give you money, it gives them a clue of who they are borrowing money to. So it is good we have a good character. If you have a bad character, lending character, it reflects not the government, not a private lender will give you money for mortgage. So the most important thing, first of all, is character. That's what we judge before looking into. These are called the five C's of credit. So for a mortgage lender also, the character is the first and most important thing. Secondly is capacity. So capacity measures the borrower's ability to repay a loan by comparing income against recurring debts. It comes down to how much money you can pay and how much debt you owe. So if you want to buy a home a home above your income, it will not be given, because check your capacity. How much can he pay? So a lot of people, we all want good things, but we have to stick to what we can afford. So there's a lot of we go through your statements, we analyze to see if the person actually has capacity to repay the loan that they want, the mortgage they want. So if they don't have the capacity, we advise, why don't you go for a cheaper option based on our analysis? This is what your capacity is, and this is what you should stick to getting. So capacity just measures the person's, so that is also measured based on your other expenses, or if you have other source of income, you have to also bring them up so that they know that, oh, I have capacity, not from one source of income, from a lot of other sources that will show that you have capacity to repay what you are looking for. So capacity is most important. If you don't have capacity for that mortgage you're requesting, it will not be granted. But if it is assessed and it is seen that you have the capacity, you get the mortgage that you want. So capital. So capital is the money that the person is willing to give you, more like the money that they want to give you. So from your character, they'll check your capacity. The capital now is what we are going to give you. Also can be called the principal. The main thing is that we'll check the capital, if you can actually, your capacity can carry the capital that you want, the money that you want to invest. It's usually for a business, but in this case, we're referring to a mortgage. So the capital is the money you want for the mortgage that you want to access. So if you look at your capacity and see that you can't afford it, it won't be given. But if it is good, then of course we'll grant it. The collateral, as already stated, the collateral must have the right title. For mortgage, if you don't have the right title, you cannot proceed. So this is because this is to protect the lender, as I said. Because as we know, for example, in Lagos, there are a lot of properties that are not properly registered. Then after purchase, you come and get feedback, you're trying to build, or then someone approaches you and say, oh, this is my property, or it has been bought, or you're trying to build and you hear that, oh, this property belongs to the government and your investment is gone just like that. So as a lender, the lender is taking a risk, giving you money to fulfill your own dreams, but they have to also protect themselves. So that's where the collateral has to be right. It has to have the right title. In mortgage, the right titles are your C of O or registered deed of assignment. Sometimes people bring survey plan. That is just part of the documentation you need to perfect your title. But your title has to have a C of O or a registered deed of assignment. That is the legal title recognized in Nigeria and generally to banks. So without this, not the government, not a private lender will give you a mortgage. And lastly, the conditions. I already stated that the terms which the loan was granted. So it is an agreement. So both parties have to agree on the condition of the facility. So if you don't agree, then there's no mortgage granted. So in this case, to access the mortgage, you have to have a good character, you have to have the capacity, the capital has to be right, the collateral has to have the right documentation, then the conditions, you have to be able to fulfill the other conditions the lender is giving to you to access the mortgage. So now we're talking about getting mortgage options, which I mentioned you can get from the government or you can get from a private lender. So the government is called NHF, National Housing Fund. So this is a fund whereby the government has paid employees and above 21 years to cater to their housing needs. So the government has created an avenue whereby individuals can access mortgage from the government, but there are certain conditions to be met. So first of all, the individual has to be over 21 years. So this act was established by NHF in NHF Act in 1992. Well, the administration is handled by the Federal Mortgage Bank of Nigeria. So NHF is given by the Federal Mortgage Bank of Nigeria, but you access it through primary mortgage banks. An example of primary mortgage bank is the Abbey Mortgage Bank. So the money comes from FBN, which is Federal Mortgage Bank, but you access it through a primary mortgage bank. So all Nigerian employees and income earners, whether paid employment or self-employment, are entitled to the NHF scheme and can register as long as they are above 21 years and above, and whose salary are more than 3,000 naira per annum. So 3,000 naira per annum is like basic. I'm sure there's nobody earning 3,000 naira per annum because even government minimum wage is above that. So it means everybody can access NHF, but you ought to be a contributor to the scheme. If you have not been contributing, you cannot access NHF. So registered members must contribute. You register, you get your NHF passbook, and you must be able to contribute at least 2.5% of their basic monthly salary to the fund through the Federal Mortgage Bank of Nigeria. So to be able to access this, as said, you must have been contributing. If you have not been contributing, you cannot access it. That's how it works for NHF. So the features of the NHF loan. So housing loan up to 90% the cost of house. So they can finance as much as 90%, but there's still a cap to the amount you can get. That's what, according to the government, they feel the amount is 50 million, but they feel for you to be able to access, they feel that 50 million is a good enough. Before, it was actually 15 million. This was just recently reviewed to 50 million in like 2 months ago. The discussion has been on the table, but it was actually recently approved. So they feel that they can cover at up to 90% of the cost of the house, which is the 50 million to be granted. So the low and fixed interest throughout the duration of the mortgage, the interest rate for NHF is 6% per annum. So that's the interest. That's how low the government can go. That's how low the NHF interest is. So 6% per annum. So the period of the loan is up to 30 years. So the long repayment, as I said, we as a bank, Abbey, we do 10 years, but the government can give you up to 30 years. So contributions can serve as additional old age security. So if you have been saving over the years and you eventually did not use this NHF to purchase a property, it will be refunded back to you. So it is also a security, more like another pension you are receiving, provided it is not used. So we have up to 50 million can be borrowed. So a borrower can only take 50 million max. That's what the government caps it as. So we have the maximum loan amount and the monthly contribution rate. So if you have been contributing below 2,000 or from 2,000 to 10,000, you can only access 15 million. So the cap doesn't mean that's what everybody can access. You can only access based on how much you have been contributing over time. You can actually access 25 million. You have been saving over 10,000 to 25,000 per month. That's the only way you can access 25 million. You can access 50 million if you have been saving for saving 25,000 and above. Refunds with 2% returns on interest on retirement. So as I said, if you have old age and you eventually don't use this money, the government gives you back with 2% interest. So your loan repayment is about the same as a typical monthly rent. So if you take NHF and you're paying 6% per annum, by the time you do the maths, you see that you're paying very low, which is almost the same thing as you pay a Lagos landlord. So why not, or anywhere the person is located, repaying back a landlord. So why not take NHF and be able to access and repay back easily? But there are conditions which you must fulfill according to NHF. So to be eligible for this NHF, you have to have duly completed your registration, which you have a registration process by approaching the FBN and getting due diligence done. At least 6 months deducted monthly contribution. So you must have been contributing at least 6 months. So if you have not been contributing, you cannot access now. You have to go and open, you have to start contributing to the scheme. Then you can access 6 months after. So you have to have a passbook. So whenever their contribution is made, there's a passbook which is updated from time to time. If you're a salary earner, it's updated by your employer. If you're a business person, you have to do the update. So a passbook updated. So you have to apply through a primary mortgage bank that I said. So that is, for example, Abbey. So we are a primary mortgage bank. So you have to apply through us and do the application for you. But the money comes from FBN. So it is a federal mortgage process. So they do the processing and we get the feedback and you access the money through us. So in the case of NHF, as we know, it's a government scheme. So it takes a longer period to perfect. So most times it takes a minimum of 6 months perfection period. So you apply through the primary mortgage bank, but you get the money from FBN. So FBN they do their own analysis and get the feedback at least 6 months after. So applicants must provide satisfactory evidence of regular income. So as I said, you must have capacity. So whether you're collecting the money from the government, in this case, NHF, they must be able to establish that you have capacity to be able to repay the money they want to give you for the property purchase. So another one is application must be single. There's no joint application. So in regular mortgages, you can apply as a joint entity, husband and wife, group of friends, cooperative. Yes, you can come and apply. For example, Abbey, you can apply as cooperative, you can apply as a couple, but for NHF, it's just a singular application. So application must only be for residential houses. So the purpose of this scheme is to help individuals have houses. So the government is not supporting for you to go and build a factory or build an office. It is solely for residential. So please note, for NHF, it is for residential purposes only. So requirements to apply for the NHF mortgage loan. You have to have completed the application form, photocopy of the title documents of the property you want to purchase. As I said, they have to be perfect. So you have to have perfected the title, which is a CFO or deed of assignment. So for whatever loan you want to request, make sure that the property is perfected, because it will not move on to the next phase if that is not in place. So there's a valuation report of the proposed house you want to buy or build. So in this case, the property valuation is done by valuers. If you want to purchase a property, for example, even from both the government and private lender, they have to go and value the property and say, oh, how much is this property actually worth? Because we all know that buyer or sellers put the amount they please as their property value. So you get experts who have their way of valuing these properties. So they value based on the location, the kind of building, how old it is. So by the time they put how much an actual property of that particular size goes for in that location. So by the time they do all that, they get a valuation report, which you must provide when you're applying for NHF, even from a private lender. So you have to also be paying tax. It's the government. So you have to provide 3 years per tax clearance certificate. That's when they will know that you're contributing to the economy. So they would also want to give back. Evidence of NHF participation. So you have to provide your passbook, as I said, copy of pay slip from previous 6 months with a salary and evidence of equity contribution or personal stake, depending on the loan amount applied for. So as I said, the cap is 50 million. So you want to buy a property of 100 million through NHF. You have to balance the rest. That's if you have been contributing above 25,000, as I said, because to access 50 million, you have to have been contributing above 25,000. So equity, evidence of equity contribution or personal stake, depending on the loan amount. So if you have paid some part of it, you have to provide proof, because you cannot say, oh, I'm going to pay parts. If the government finance the 50 million for me, by the time you finance it, I'll pay the rest. No, they'll ask you to provide proof that you have paid the rest. Then they will support with the 50 balance of it. So letter of offer for property duly accepted. So you have to provide the offer letter from the buyer. That has to be in place. That, oh, there's been offer, you've accepted it, so you are willing to move on to the next stage. So you have to provide your birth certificate, age declaration, and account funding for the required charges that may apply. So that is it about NHF loan accessing through the government, NHF, that's for National Housing Funds. There are more information at the end of my slide. I may give you more insight, and you can also find out online. So the next way you can access mortgage easily is through RSA, which is the retirement savings account. So we are all, the Pension Act provides that employers with at least 15 employees are required to participate in the contribution pension scheme for their employees. So we all pay, most people pay pension. It is required by the Pension Act that if you have above 15 employees, you should have a pension retirement savings account for each staff. This is very important, as we know. It's more like it's a guarantee for old age. So it is required by law. So even as an individual, as a business person, you should have a personal retirement savings account. You're not mandated to, but it is for the future. So why not? Because if the money comes back to you at the end of the day. So RSA now is retirement savings account. So you have a retirement savings account. There are different pension managers that you open the accounts with, and the contribution is paid to every month with a salary earner. And as a business person, it's supposed to be monthly. So as you please, you can decide to, if it's a business person, you can decide to credit your pension account as you please, which is to save for the future. Most of them now give interest, there's returns. You actually get notifications and see that, oh, your money is being invested and there are returns, even if it is minimal, but there are returns to that contribution. So PENCOM, the supervisory body for pension providers in Nigeria, recently approved that retirement savings account holders can access 25% of their money and apply for mortgage. So this act is a recent act. It was done last year. And before, you cannot access your retirement savings until you are 60. So, but for now, the government decided to open a window whereby you can access 25% of what you have been saving over time. So you check your retirement savings account and say, oh, I have so amount. I can now access 25% for the sole purpose of mortgage, no other purpose. So it has to come through us. It has to come through also the primary mortgage bank. So you can apply for it, but first you approach your RSC, the people with your pension account, people with your pension account, and get the information from them on how to go about it. But they will ask you to apply through us. We'll do our own due diligence and get back to them before they can release the funds to you. They won't even release the funds to you. They release it to your primary mortgage bank, which will in turn use that as your equity to achieve the property you want to buy. So in other words, I have a property of, let's say, 20 million I want to purchase, and I have 2 million I have maybe 10 accounts. I can only access 25% of that 10 million, which is 2.5 million. So that 25% will not be released to me. Instead, it will be released to the mortgage bank I approach. And the mortgage bank, it will be released to that mortgage bank. In the case, the mortgage bank might open an account for you and have the money there, whereby you either apply for a mortgage from the mortgage bank to complete the property purchase, or you can pay outright. So you can access that 25% of your contribution. You are entitled by this new act to access that 25% for the sole purpose of purchasing the property. But I think this law comes with the fact that if you're accessing that 25%, you must be accessing it through a mortgage plan option. Meaning you cannot just access the 25% and then add the balance to purchase your own house by yourself. So they are assuming you don't have the money. That's why you decided to access that 25%. So by the time it's in your mortgage, with the mortgage bank, you can then decide, oh, I have, as I said, the property is 20 million. Okay, the mortgage bank give me 10 million as mortgage, then I can contribute to many 7.5 to buy the property. The mortgage bank has no issues because the only thing is that you must have a stake. We'll get to that towards the end of the slide. But to access mortgage from any mortgage bank, you have to have a contribution of your own, which is called equity. So before a mortgage bank can give you a property, can pay for a property for you, they need you to make a commitment, because we feel people are only committed to repaying. Once you have a stake in what you are buying, it shows that you are serious about the investment you want to make. So we need you to make a contribution of your choice, but there are different percentages for different banks. We have our minimum contribution of 30%. So you need to make that minimum contribution. So that minimum contribution of 30%, which you are required to do so, if your 25% from your RSA covers up for it, will complete the balance for you. But if it doesn't cover up for it, you have to meet up with our minimum 30%. They said I'll get back to that towards the end of the slide. But for RSA, you can only access 25%. So employee must have been saving for 5 years. So if you have not been saving to access this plan, if you have not been saving, if you don't have your RSA is not up to 5 years, you cannot accept it. We'll provide an offer letter after fulfilling mortgage conditions. So as a mortgage bank, they'll give you conditions, their own conditions. This RSA has nothing to do with the mortgage bank loan conditions. The mortgage bank is going to do its own due diligence. The only thing RSA, the PENCOM committee, is doing for you is giving you access to your 25% of your contribution. So the mortgage bank will have to provide an offer which will be taken to your RSA, to the pension body, to release your pension, the 25% for you. So we have to see that offer letter also. You must not have been working for more than 32 years and not above 57 years of age. That's the limit of this, because they feel you're already retiring, so you're close to retirement. So the best option, you don't have a long time to repay, so you probably collect it after your savings. So you can only access RSA once. So that your 25%, if you take it now and you still have a lot of time to go, you can't take it any other time till you are refunded back your contribution. So it can only be assessed once in a lifetime. So this is the eligibility for accessing RSA. The RSA holder must be in active employment, either salaried employee or as a self-employed person. You must have made contribution for a cumulative minimum of 60 months, which is 5 years, as stated. Must apply in person and not through a third party or by proxy. You must have an offer letter from the primary mortgage bank you're applying through. You can only be assessed once. You cannot access half of the 25% now and access the remainder later sometime. So it's 25% once and for all. You must have completed data recapture exercise done at the office outlet of the pension provider. You must not have worked for more than 32 years or above 57 years. So this is the application process, a snapshot of the application process. So you approach your PFA to confirm eligibility and obtain stamped account statement. Which pension fund is. You identify a home and obtain letter to purchase it. Thirdly, you submit your mortgage application request at the bank, for example, Abbey Mortgage Bank. 4, you obtain offer letter from Abbey showing willingness to finance your mortgage. So you get the offer from us, you take it to your PFA. That's the PFA is the pension fund administrator, to show that Abbey is willing to finance your mortgage. So by the time you submit your mortgage offer letter, property value, you also submit your valuation report. So as I said before, a property will be given to you, it will be valued to show the actual value of the property, which is what is used to measure, not what the buyer is saying or the seller is giving, not the value the seller is giving as the property value. We use what valuers, professional valuers give to us. So if there is a difference, you have to complete that as the buyer. So the PFA forwards application request to PENCOM for approval. Upon approval, the PFA contacts Abbey, the bank, for other documents to effect payment. Your PFA instructs the pension for PFC to make payment into the nominated bank account. The PFC is the pension fund custodian, the people actually with the funds. Abbey makes payments for the balance of the property into the nominated account. So we pay directly to the owner of the property. The money is not given to the buyer, it's not transferred to the buyer. It is transferred straight to who is selling the property. Whether you are getting that through mortgage or through the through normal mortgage or government or whatever process you're following, the more money for payment for mortgage is paid directly to the seller of the property. Then lastly, the RSA holder moves into his or her new home. So this is a snapshot. They are always the detailed information are always provided when you want to apply. So we give you the detailed list and procedure on how to go about it. But this is the snapshot of the process. So we as Abbey Mortgage Bank, we also give loans. We are a primary mortgage bank, so we do mortgage as expected. So these are all mortgage features. So you can higher loan amounts up to 250 million. We do a 10-year maximum tenure. We have a competitive interest rate. We cannot give you, so the debt to burden ratio means we cannot give you a loan amount or a mortgage that is above 35% of your income. So by the time we get your salary or other sources of income, we put two and two together, we assess your financials. We cannot give you a repayment or loan to purchase a property that your repayment will be more than 35% of your income. So that is the capacity. Our capacity is cut at 35% of that person's income, because that's even a standard law. It's from the government. CBN only regulates that a borrower can only access 35% of their income. So you have that is to make you not default, because if you give chance, some people want to access 70% and say, oh, I can manage on 30%. But we understand that there are other financial decisions, there are other requires, there are other liabilities you have to take on. So we cannot give you any capacity, we cannot accept anything that will take your capacity above 35% of your income. So debt to burden ratio cannot be more than 35. Your 30% minimum equity, as I said. So these loan features mostly are almost the same in most mortgage banks. It just differs in figures, because I can say I can do 250 million, another person can say they can do 200. Someone might say we can only do 100 max per individual. So 30% minimum equity contribution is our own minimum equity that the customer has to pay. So as I said, you want a property of 100 million, you have to have at least 30%. That is your own stake in the property you want to purchase. That's your own contribution. That shows you're invested in the property you are purchasing. So the minimum for us is 30%. So we have a seamless loan repayment whereby we can directly debit your account to repay the loan every month. So we do joint mortgage. We have joint mortgage options. NHF doesn't permit that. The government doesn't permit that. But we, as a PMI, Primary Mortgage Bank, we have the joint mortgage options. So a cooperative, a group of friends, a couple with established capacity can apply through us, from us. We have a turnaround time of 2 weeks. So with all the documentation in place, we have our own loan terms and conditions, which will be provided to you. There are also boxes that should be ticked. So the request, the loan requirements should be ticked. So if you have all that in place, as at when you have all that in place, it takes us about 2 weeks to be able to give you your mortgage as requested. That's, as I said, when you have all what is needed from the time your documentation is complete. So most times some customers might want to say, oh, it said 2 weeks, so, and their documentation is not complete. So it is better you have your documentation from the onset. Once you have provided the requirements, you make all that available. Once that is available, then 2 weeks after, we give you 2 weeks, your mortgage should be ready. So option of early repayment with no penalty. As a bank, we want our customers to be able to repay without without a penalty for paying early. So you take a mortgage, for example, for 10 years, and in the first 2 years, you get back the money you want to pay back. You get back the amount you're supposed to pay back. We encourage customers to pay on time. We don't charge them defaults for paying. We encourage them to pay on time. So you can pay on time, which you don't pay for the other time you didn't use the loan. You paid in 2 years. You don't pay interest for the remaining 8 years that you didn't use the money for. Or we don't say, oh, because you paid early, we're going to charge you 10% the loan amount or 5% or whatever. We don't charge at all. You pay your repayment stops, your interest payment stops the day you finish paying back the total principal that was given to you. So we give access to mortgage via your retirement savings account. We also have access to NHF loans. So these are a few of our eligibility. We must be above between 21 to 60 years. We must have a current account with the bank. You must have a verifiable source of income or cash flow adequate to service your loan. Your property to be mortgaged should be in good condition and located in prime areas where you can sell off easily. Property to be covered by registered or transferable unencumbered title. Clean credit reports, at least 2 credit bureaus. So as I said, there are credit bureaus where your credit report is checked. So we need to see that even if you have a loan, you are paying on time. You're not an unwilling borrower, unwilling to pay back. So we must see that you have been performing. There are no issues. Your title must be registered. So this, as I said, loan eligibility is same most times, same for all banks, all mortgage banks, but it just differed by the amount or the percentage they are willing to, how much they are willing to go, or how much they are willing to give, or the tenor, or their range in terms of any. It just differs in numbers. Most times the conditions are the same, so it just differs in how much percentage or the numbers basically. So if you approach any mortgage bank, this is most likely the same requirements you're going to give. But using Abbey because I'm representative in question. So as Abbey, that's it about mortgage. As I said, that's basically it about mortgage. Uh, you have to have the capacity. You have to be able to the collateral, the right documentation for the property of choice. You have to be in the same age within the right age frame. You have to have a good clear credit report. Property must have the right title. You have to have the capacity, the character. So everything has to be in place. As you can see, when we talked about the NHF, the RSA, and also getting from a private institution such as Abbey, the conditions do not differ. It just differs in the amount or the conditions or the age range or how much can be assessed. But most times, mostly mortgages and assessing mortgages are all the same, mostly the same terms. It just differed by the risk appetite of the institution or the organization in question. So that is it basically about mortgage. I will leave the floor open for questions, but before then, I just wanted to talk about Abbey, since we have a platform here. So we also, as a mortgage bank, we have properties for sale. We collaborate with real estate realtors and help them sell. So there's a fast selling property here at Ogombo, off Abramade Soya towards Lekki Expressway off LBS. So we have a property there for sale, going 100,000 per square meter. We have an initial deposit spread. This is a service plot for, we have service plots. We have 78 service plots. It's within an estate, and the minimum standards plot is 400,000 square meters. So as I said, it's 5 minutes from LBS and Abramade Soya. So we can also provide, this is a snapshot of the property. You can also reach out if you are interested. It's just a property that is just out and is selling fast. Thank you for your time. Then the last one about Abbey is we also do investments. So as a bank, we are a mortgage bank. So, but before being a mortgage bank, we're a bank. So we do investments, we give out loans. So that's basically a function of a bank. We receive deposits, give out loans. So definitely we do investments, we do fixed deposits and all of that. So but we have a special product which is tied to real estate, whereby we have a land in Lekki phase 1, which is valued at about 3 billion presently as of last year. So we have the products we designed is that because we're a mortgage bank, we have to design products that are real estate inclined. So the products we design is that you invest in that particular property, and you invest in the property. As the property accrues value, you also get your repayments. You also get the interest as the property accrues value. So if the property is worth 3 billion now and it turns to 4 billion naira, that's like 33% increase in the next 1 year, for example. So whatever that property has accrued by, that's what you get as your return on investment. And we call that real estate notes. This is with our partner with our real estate firm, Dre. So the quick tips are we have 2 hectares of land at Freedom Way with a value of 3 billion. The land is divided into 600 lots per square. Interested customers purchase lots and receive an investment in warehouses funds. So this is an insured investment by Afrinvest. So those are for those who want to. So this particular product, you are not buying into the property, but you are like a stakeholder. You are investing, whereby you get the returns after 2 years. So the the product has been running for a year already, so we are open for new investors for the next 1 year. So this is not a mortgage; it's an investment product whereby you invest in the property. By the time the property is mature, which is next year, we give you the returns of the investment. So whatever the property has accrued by, that's what you get as minimum return. So we're selling 5 million naira per lot, but a group of persons can come and break it down and come together and buy a lot. So if you come together and buy one lot, but whatever the interest has accrued will also be shared accordingly. So that's it about our real estate investment notes. So thank you so much. So Abbey products, we do structured learning, we do treasury, we do business advisory, property sales, e-banking, and retail and corporate accounts. So that is it about Abbey generally. So we are a bank and we do what banks do. And above all, we give mortgages, which is our first call of duty. So thank you so much for this opportunity. I appreciate and I hope I've been able to pass knowledge down for those who didn't know so much. Thank you again for having me. Thank you. Mr. Damlari, questions, please. The floor is open for questions. Thank you.
Thank you very much. Thank you so much. Thank you for your time. That was a great one. Can we please, put our hands together for our guest for that wonderful time? Can we please do that? Just some appreciation. Wow. And the people actually stayed in through all till the end. That was incredible. So can we start bringing in the questions? She has also said that she's here with her team. I have about 16 questions already. But hey, people are really coming. I trust our people. They don't waste time.
Oh, wow.
So I know that they won't allow me to ask my own self. So you see what's happening. The first question has dropped, and then we can begin to attend to them very quickly. As a civil servant residing in rural environments, because we have people from Jos, from Enugu, all those areas too who are in this conversation. As a civil servant residing in rural environments, who wants to access the NHF loan? How does it go about that? That's the first question that we're having there.
Okay. Yeah. So it says you have to approach your PMI, Primary Mortgage Bank, which is us, for example. With the NHF, anybody can access it. You just have to meet up the requirements. The requirements are already clearly stated, and I hope you share the slides with your community afterwards. So the requirements are clearly stated. If you can meet up with the requirements, you must have been contributing. As I said, if you have not been contributing, you cannot access it. So if you have been contributing, yes, you can access it. Come to us, we'll give you a list of requirements. You go through your mortgage, you go to FBN for capturing, because your data has to be captured, which is not captured by us because we are not the one giving you the facility. It is coming from FBN. So, but once you do that and you're able to fulfill the requirements, definitely that's not a problem. It's a national housing fund, so it's for Nigerians, for Nigerian citizens. So it is for everybody, and your location at that point doesn't matter. It's just that, as I said, the property should have the right title and everything that is required by NHF to be able to give you that facility.
Okay, thank you very much for that speedy response. For the mortgage requirement, it states that one have to provide a copy of payslip for the past 6 months. What about business owners? What is the alternative for this payment slip?
So for business owners, you have to provide your statement of account and the audited financials of your business. So we can know how much income you're actually making, because cash flow is cash flow. But from your audited financials, we'll know how much income you're actually making from your business. So we need your statement of account for the past 1 year minimum and your audited financials for at least 3 years, or depending on how long the business has been existing. So if been existing for a long time, we need at least 3 years to be able to show that, to establish how the income comes in, to establish a pattern. What is a new business? We still need the audited financial. At least you should be existing for at least a year. So we need to see your audited financials and your bank statements.
Okay, and very quickly, someone was asking that, do you have particular states where you operate? That's Abbey Mortgage, or yes, they can those individuals in any states of the country?
So for Abbey Mortgage Bank, we are located in 3 states in Nigeria. Well, Lagos State and Asaba. But we have branches also in FCT, 2 branches. This is not a state, but stated as a state. So Abuja. So we're in Lagos, Abuja, and Asaba. So we can only operate within our office locations for now.
Okay, but irrespective of your location, you can access,
Yeah, you can, based on where the property is located. So the property has to be located within these 3 areas I mentioned. So we cannot finance a property that is not in the state for monitoring purposes. So we have to be able to monitor. So
okay.
we only finance properties within our office location.
Okay. Then someone is asking that what are the practicality? Someone who is interested in assessing the NHF, what's the practicability? What are your timelines? Do you have verifiable evidence of beneficiaries across Nigeria? That's a part A. The part B is, I also understand that you can also utilize 25% of your pension. How does this work? And have you successfully done this for beneficiaries since it was announced?
Okay, so for NHF, it's as practical as was stated, but it's a government scheme. So we know how government schemes are. You have to be patient. The minimum time we've been told is 6 months because that is not actually our products. It is something that government does. They just give you the money through us for monitoring. So it is a government product. So they analyze and they do all their processing, and the estimated time we've been given is 6 months. But as you know, it's a government product, so you have to be patient. So the minimum expected turnaround time is 6 months for NHF. Then we also have past beneficiaries from NHF. We have cooperatives who have benefited that from us. We have individuals. But for a while as a bank, we actually stopped. We actually stopped doing NHF in the last maybe 4 or 5 years. So we've been existing for 31 years. When we started, it was basically NHF, but based on character of individuals. So that was put to stop by the management. So we just recently restarted it with a better way of monitoring these funds. So yes, now you can access NHF through us, but we have to fulfill the conditions as stated. Then for RSA, you can access 25%, as said. It is a new product. As I said, it was just put into act. It just said, was it 6 months back? So practicality of it is we have individuals who have applied. So it's how fast your RSA is able to reply us. That's when your PF is able to reply us. That's when we are going to go ahead with the processing. We as a bank, we are only involved with the mortgage aspect of it. We are not the one releasing the funds because the funds is not with us, it's with your PFA. So we are not the one with the funds, with your PFA. So by the time the fund gets to us, we just do our back-end mortgage processing because we are involved in the mortgage part, which takes about 2 weeks with the right documentation. So what we are required to give your PFA is an offer letter and due diligence on the property conducted. So by the time we give them a copy of the offer letter you have signed and showing that, yes, you have started the mortgage process with us, they have their own turnaround times, different PFAs as we know. So they have their own turnaround time. By the time they release the funds to us, that's where we can now go ahead and use it for the mortgage you want. So those two processes are dependent on the different bodies. NHF is determining how long it should take for you to get your NHF loan. RSA, your PFA determines their own processes on releasing your 25% to you. We do our own mortgage processing as our standard mortgage loans. So it's dependent on both institutions.
Okay, thank you more for that. Then there's another question here that says that, can one use the land he wants to buy as a collateral? Still you want to acquire it, you've not acquired it, can it be used as a collateral for mortgage?
Yes, that's even the standard. So it's expected that the property you want to buy can serve as collateral for your loan. Yes. So that's why we value it and we see the amount because it is the point of is the reason for the loan. So of course it's tied to the repayment. So yes, that's the collateral for the facilities. Up to you if you want to provide another one as a collateral. That's fine. We'll accept both either ways.
Okay, so very briefly, this one Alfred said, how do I open an NHF account and how long before I can apply for a mortgage loan? I think part of that was already responded to.
Yes.
Already. It will take you 6 months if you are an employee, 6 months of consistent remittance. That's what will take you. And you need to apply through a primary mortgage bank to do that. Please explain how the mortgage repayment works. Let's say I took 50 million to complete the purchase of my house, and the interest on the loan is 25% for 15 years. This 25% is the total repayment interest on annual. This 25% is the total repayment interest on annual repayment interest, and is the repayment done monthly or annually? Because please explain in a clear terms. So this person wants to know about how's the repayment of mortgage like.
Okay, so repayment for mortgage is a monthly, it's usually monthly. That's for easy monitoring. By the time you take a loan and you are not paying until 3 months after, you might just, it's character, we're humans. So for easy monitoring, it is monthly. Most organization, I know loan repayment is a monthly repayment. So yes, it is monthly. Then the 25%, for example, it is a annual interest. So if you are saying you're paying 25% interest on your loan, let's say you take 25 million for example, 50 million for example. So you're going to be paying 25% of 50 million annually. So now the difference is some banks use a flat rate, but most banks like Abbey use a reducing balance interest rates. So reducing balance basically means that you are paying interest on the amount left. So let's say you take 50 million. For example, in the first year, you're paying 50 million. So you're paying 25% of 50 million. But would have, okay, let me put it practically, as I said. You're taking 50 million for 5 years. So that means you're paying back 10 million per year, principal. That's not interest. So the first year, you are paying 25% of 50 million because that's the amount you took. That's the interest you'll be paying back. Second year, remember when you are paying back your loan repayment, it has to be principal plus interest. So that 50% of 25% of 50 million, it will be broken down first into 10 million naira per year, for example. Then that 10 million naira, we'll divide it into months. So we'll say 10 million, you're supposed to pay 10 million divided by 12. For assumption, let's say it's 1 million naira per month. So you're going to be paying 1 million naira plus the 25% interest that has been charged. So you divide 25% of 50 million, the whatever figure you get, whatever figure you get, please can you hear me?
Yes, you can go on.
Okay. So whatever figure you get, you divide it into your monthly repayment. And by the time you add both, you add your principal plus your interest. And that's what you'll be paying every month. So the next year, you might pay 25% of 40 million because your principal has reduced. You've already paid 10 million in the first year. So your principal has reduced, which is 25 million now or 40 million. So when you do 25% of 40 million, we'll say if that 40 million, you're still paying 10 million per year. So we say 10 million divided by 12 months. So let's assume again is 1 million. That 25% of 40 million that is left, we'll break it down again in 2 months. And that's what, so you'll be paying 1 million plus the interest that has been divided. So that's the practical example. But to get the actual figure, we have a loan calculator. So once you put in the amount and the tenor, it gives you an automatic flat repayment.
Okay.
Every month, so that it is a consistent amount, so that you don't say, oh, I'm paying this amount now. A flat balance. As we said, Abbey, we don't charge. So if you take 50 million and in the first year you have 30 million, we are happy to take the 30 million. So the only interest you'll be paying back is the interest on your 20 million. So that's what is called reducing balance. While some organizations might do flat, whereby whether you use the money or not, or whether you've paid back some notes, you're still going to be paying the interest on 50 million. But for Abbey, once you pay some part
Can you hear me, please? Hello, just want to be sure. Am I audible? Hello? Okay, I guess it's from my hand then. Okay, I just wanted to be sure. I think she's back, but you're muted.
Okay, yeah, sorry,
Yeah.
where did you lose me? Sorry. Did you get to the end of my explanation?
Yeah, yes, I think we actually did that. We still have a couple
Thank
of more questions, but I want to rush them through so that we give people the somebody's asking that can mortgage be used to acquire a vacant land?
So it depends on the organization. For us, we can access mortgage. We don't do plain land. It has to be a property involved. But if you want to construct on a plain land, you have to provide a different collateral. Remember, I said the property you want to purchase can be used as the collateral for your facility for the mortgage. But whereby is a plain land, you have to provide an independent collateral for that mortgage.
Okay, then
Yeah.
that clarifies it. After fulfilling all requirements with you, how long will it take for you to release the fund to
Yeah,
these?
so our turnaround time is 2 weeks, 2 to 3 weeks. You get your
Okay.
yeah.
Do you provide fund for purchase of property? How about development of property? Do you also finance that? I'm not sure.
So we have what we call construction finance. So whereby you want to construct. But as I said, anytime you want to construct, there's a plain land. You have to provide an independent collateral.
Okay, that's okay. Let me quickly respond to the Fred. Apologies. We would like you to please type in your questions. We're already, stayed out of time. Usually we would use 1 hour, 30 minutes for these are our monthly webinars. But obviously people are getting a whole lot of value. And, because of the over 30 years experience of our partners, they came in like, with a lot, for us. So that's also on its own. So we are out of time. If you really want to ask the question, please just type it in the chat room. We can take that, very briefly. Somebody's asking that, can we have a contact to call for Abbey Mortgage?
Yeah, that's fine.
Okay, great. So I also know that for the members of the community, we will share the slide with you later today for all members of the Abode World community who have put this, monthly financial intelligence webinar together. I want to say a very big thank you while we're waiting for, okay. So Emmanuel is replying back to this. So that means that for a fixed rate of 25% interest per annum, you'll be paying 25% times 15. That means 375% for 15 years loan.
Yeah, so it is, to be honest, I know where it's driving at, but as I said, mortgage in Nigeria is different by current market rates. You take investments for people and you give others as loans. So the rates you are giving out those investments, as I said, we're a bank, so we receive deposits and we give out loans. And the monetary policy rate also determines how you give out this loan. So if it's going up, your lending rate goes up, your investment rate also goes up. So let's remember that we're taking deposit from people and giving out as mortgages. It's not a government financed institution. So those deposits you are giving out, the rate they are also getting drives how much you can give out your loan, your mortgage. So it has to balance out. So the people coming for mortgage, if they also come for loan for investment, they also want higher interest rates. So that rate drives how much your mortgage is. So let's not compare Nigerian system to the one overseas. We know overseas have a single digit interest rate, but it's the economy. The economy drives everything. So once everything is high, everybody knows once MPR rate goes up, the rate for lending goes up. So it's the country, it's the economy. So that's what it is.
Yes. That is very, very important that people need to know that. Okay, I need to shed more light. The reality, okay, we would not, so on that note, we will not permit that. That will not be credible enough for our people here. we will not be able to do that on that note.
Are you talking about the interest rate?
No. I'm responding to a question by Fred.
Okay.
That you can hear me. And so I just wanted him to know the reason why we will not permit that to happen on this call, as we're honorable people, and our partners too are very honorable. If you need any further question about the information, you can please go check them out. These are accredited organization, so you can check that out. We will not be able to do that. So someone is asking, what's the current interest rate on your mortgage? I think that will be the final one we will take today before we call it a day.
Yeah. So our current interest rate presently is 28% per annum.
Okay. That is it. First, I would like to say a very big thank you to you for doing this. I know it's been long. No, we do. Yes, they will provide a contact with them. I want us to be able to, especially for those of us who are new to this community and how things have been done. That's in young Estate Abia. Our relationship with Abbey is a great brand, and they provide as much information, even outside of the scope of what they do. They spoke about how the National Housing Fund works, which for many of us, this information are even available out there, but maybe possibly we don't have someone who can break it down for us like this, and they've done justice to that from what they have explained today. If you need any further clarification as regards this, and for those who are in our community, we'll share the details with you. You could walk up into their office, you could have meetings with some of the consultants, and they would help you out with that. But this has really been amazing. Thank you so much for taking time out, Blessing and the team, for everyone, the directors, every single person. Thank you so much for making it here today and doing this with us. We look forward to do other things together as we help to build a more sustainable financing for our people who wants to yes. Okay, great. So yeah, God bless you so much, everyone. So before we wrap it up, I just have a few announcements, especially for people in our community. Thanks to everyone and everyone who's been here. This whole event is put together by Abode Asset Management. Abode is a fractional ownership of rental properties platform. We provide opportunities for people to co-own income-producing and capital-appreciating assets. So simply put, we're creating a community, right? And I said we're over a year already. We're creating a community where people come together, irrespective of their financial status, irrespective of their region or where they are. They can co-own assets together. It could be a short-let apartment, it could be a rental apartment, it could be a commercial building, and they earn rental income in. And they also have an opportunity to exit on the property in a couple of years to come. Very, very importantly, and that's what we've been doing over the last 1 year. We've listed 9 properties already. We've exited on 2. Exiting means that people have co-owned those assets together. Abode holds the asset in trust, through our trusted partners, and then we own that asset in trust. We manage that asset and ensure that everybody is being paid, and that's what we do. The Abode Work Community is an extension of that program. It is where anyone, whether you're a subscriber to our platform or you have participated in any of our projects, you can come together under this social cooperative community, and then you can get access to all kinds of financial information. We bring reputable brands like Abbey. We bring in information like this just to share, with people and ensure that they are abreast on some of the needs, some of the things that they need as they project towards their financial journey. And it's very exciting for us. We find this fulfilling. We've been doing this since January. So this is the 6th edition, and we're already looking forward to what's going to happen in July. We'll be updating the people in the community on what aspect of finance are we going to be talking about, in partnerships and reputable brands also in that context. So let me just talk about a few announcements, and then we can call it a day. Our time has really fast spent. So the members of my team are dropping the link to the Abode Works community. It's free. You can join. You don't need to pay for it. They're dropping the link. It's there in the chat room, so you can just join, the link, and then other informations will be passed there. The month of June was our 1-year anniversary, and I know that we've done some amazing things at the beginning of the month. So as part, still in that mood of that anniversary, we are doing a refer and earn promo, and I want to use this opportunity to announce it here for you bringing people to the Abode platform. Like I said, if you have not registered, there's an opportunity for you to register. It's my abode.app, and on that platform, you will see different kinds of verified and secured assets. These are assets that are in prime locations that has the possibility for capital appreciation, and they also have rental income potentials. So you can register on there. So for everyone who is listening here today, the refer and earn promo, if you refer 10 people, you have your wallet credited with 5,000 naira, courtesy from Abode. So just refer 10 people on the platform. Also, I also want you to know that there are referral bonuses for even when the people you refer take action, also on our platform there. So, but that's the refer and earn promo. Refer 10 people and win 5,000 naira to be, we're credited into your wallet in our wallet system. And you can also use the opportunity to see products. There are products as low as 5,000. That's one of the things that we've done. There are products on our platform that are 300,000 naira per slot, just to ensure that everybody is inclusive in there. So that's the promo that is ongoing, and it's just for 72 hours. It's just for 72 hours so that it won't be out of hand. And then if you'd love to be part of the community, like I said, they've been dropping the link there. You can join the community. We provide access to tools, financial management tools, budgeting tools, income appropriation tools. The income appropriation tool is the most downloaded tool that is helping people to plan their monthly income. That's the most downloaded tool. And something big is coming about that tool. He is going to be moving just from a tool to something much more bigger when we get to our annual flagship program, the slides in September. So once again, guys, thank you so much. That's all about Abode and what we're doing. Thanks to Abbey, Blessing, and the team, and everyone for making it. Thank you so much, everyone. We would love to hear more from you. We'll send you links to this video for those that want to, look at it more again. And then we'll share the slides. We've been given that permission to share the slides with you and other content information of Abbey, and some other partnerships will be coming up with Abbey very soon to the community people. And we'll look forward to that. I want to say a very big thank you so much again. Do you want to say anything, Blessing, if I call it the day?
Yes. Thank you, Mr. Damilare. Thank you for the opportunity. This platform is a great one to be able to talk and spread the news about Abbey and what we do. So thank you for the opportunity. We appreciate and we look forward to future partnerships. Thank you so much. So I think I skipped one last thing about the collateral. Okay. So apart from using a property as collateral, you can also use cash as collateral. So as business people, so business people, some of them don't want to, some of them prefer to use cash as collateral and not use a property. So you can use your cash as collateral and get cash from us. So it's a way of balancing. That's for business people. So anybody who needs more information can also reach out. Thank you again. Thank you to members of my team for being here. Thank you for having us aboard. We look forward to the future relationships. Thank you.
Thank you very much, everyone. Do have a fruitful weekend and God bless you.